India is currently in a food surplus stage with rising production of food grains and horticulture. In fact, it is the second largest food grain producer in the world after China. So let's talk about an industry which gets impacted by this particular thing. Agrochemicals industry, which was valued at around 40,000 crores in FY20, out of which domestic consumption was around 20,000 crore rupees. In fact, the market is around 15% share of the global agrochemicals industry. This industry is expected to grow at a rate of 8 to 10% till 2025. The global agrochemicals value chain comprises of raw material suppliers who supply both petrochemical derivatives as well as natural feedstock, and then it goes on to active ingredient manufacturers who make ingredients like fungicides, we have insecticides, and then it goes on to the formulators who produces the end products and dilutes ingredients as per the user requirement. Then it is sent to the distributor who distributes and markets it, and then it goes to the consumers, something like farmers who actually consume it. India heavily depends on China for agrochemical raw material imports, which is close to 50% share of total imports. In terms of trade, India is a major exporter and importer of agrochemicals. India was the fifth largest exporter for agrochemicals in 2019, followed by the likes of US, China, Germany and France. Agrochemical patent worth $4.2 billion are going off patent during 2019 to 2026, which could be an opportunity because with number of products going off patent, it would provide companies with significant opportunities to develop off-patent or generic active intermediates. This is likely to create a large opportunity for export growth for India's agrochemical industry. Now, the other data point to note is that India's use of agrochemicals is just 0.6 kilogram per hectare, which is lower than US at 2.5, China at 13.1, Japan at 11.8, and Brazil at 6. It also includes the other Latin American countries. Agrochemicals play a major role in increasing crop yields by 20 to 30%. And hence, they play an important role in improving farmer productivity. The companies that tend to benefit from this would include Bayer Crop Sciences, that holds the largest market share in India's crop protection market at 11%, which is followed by Syngenta at 7%, UPL, and others would include the likes of PI Industries, Dhanuka, and Sumitomo Chemicals. Important to note, UPL's market share in the global agrochemical market is 7%. The rising use of environmental-friendly products may put pressure on agrochemicals demand, but companies are trying to address the environment-related concerns by focusing on producing eco-friendly products such as biofertilizers, micronutrients, biopesticides, and other organic products as well. The other challenges are cyclical business and lack of awareness that the general industry has. But of course, the government has been focusing on this sector, and Atmanirbhar Bharat is something that they are watching out for as well. So let's look out for the updates in this particular sector.